little bit early because it's important to speak with Jonathan at 7:30. He is our expert of the day on Thursdays. A couple of things before we jump into the daily financial news. First and foremost, top of the description, I will be adding a link to a video that Dion and I did yesterday or the day before, kind of overrated, underrated, the real estate edition or one rental at a time edition. Dion was nice enough to record it and host it on his YouTube channel. So Dion Talk, I will be putting the link below once we are done with this live session. And then second, it is time to talk about why we can't have a real estate crash in 2021. I don't know what it is about the last 48 hours, but I've seen plenty of videos once again declaring that we are going to have a crash this year. So let me just remind you of the three things that would need to happen. Any one of these three things could cause a crash, and then I'll let you answer how likely they are. First and foremost, as I've said many, many times, YouTube entertainers need to stop pointing at price, median price, average price, whatever it is, the price in 2021, and then pointing at the price in 2007, 8, 9. Price or value of real estate is not an indicator of a crash coming. It is a factor only in that it is attached to an interest rate, because real estate crashes, at least one of the causes, can be when the affordability index collapses to a low number and no one else can buy, right? You're scraping the bottom for people to get yes answers. And that is what happened in the Great Recession. We took our lending standards to such a non-existent level that people who should have never owned got a yes answer on a mortgage. Okay. So right now in most markets, outside of the big cities, affordability it's kind of in the middle. It's okay, right? Fresno, I think, is a 47 or a 48, for example. So what could cause a housing crash? Let's just get this off the table. One is an explosion higher of inventory. Traditionally, it would be inventory that is stressed in some fashion. Think the Great Recession, where banks were dumping properties every Monday when they got their next batch of REOs or short sales. Sure, we have all talked about the 3 million or so folks that are not paying mortgage payments, right? They're in forbearance. Sure, there will be some problems in that pile. I suspect less than most, but even if it's more than I think, just given timelines, that inventory is going to come on sporadically. It will not come on in waves, because a foreclosure in California might be faster than a foreclosure in New York, for example, judicial versus non-judicial states. But it's the timeline that would be required would take us into 2022. So yes, we could have supply increases. Yes, there may be some cities that are drastically affected and definitely feel pain, but we're talking nationally. These people are talking 20 to 40% collapse in 2021. It's not possible. We would need inventory to go up 300 or 400%. Most of the realtors I speak with, sometimes investors, they're telling me their market is down to less than a month. So we would need inventory to explode higher by 3 or 4x for there to be a problem from a supply side. Next up, as I shared earlier, price or value of a home has very little to do with calling a crash. It's payment. And we have seen some rise in interest rates, right? There were times where you could get something 2.5, 2.6, 2.7. Now maybe it's 2.9, 3, 3.1. This is a rise. This is going to turn some yes answers to no answers, but it's not the kind of move that's shockingly higher. If it is a slow progression higher, we will be fine. It's the rate of change that could really kick real estate in the teeth, if you will. Think going from 3 to 4.5% 30-year mortgage fixed call it in 2 or 3 weeks. If that happened, that would shake up the real estate market. Is that possible? Yes. Is it possible in 2021? I don't think so. I think the Fed is going to drop so many things on us to make sure that this year is good, and the GDP is up, and we're bringing back jobs. The Fed will buy all the long end if they have to, which will keep rates low. So I don't see an explosion higher in rates this year. And then finally, the consumer could get scared. And I'm not talking like a little bit scared. I'm talking Bear Stearns collapsing scared. If I was in the market when that happened. And I know several people that had gorgeous flips going on. They had lots of walkthroughs and open houses. And then suddenly one day it was over. So it is possible that the consumers freak out. Although I would argue in the current crisis, what they're learning is space is good. I want my own pad. I don't want to have neighbors, no more elevators. So I think this crisis is very good for real estate, specifically single family homes. But, it's possible, right? So again, an explosion higher in inventory, drastic run up in interest rates, or a crashing of demand are the only things that could cause a crash. I don't think any of those three are likely, but those are the three things that could cause a crash. Are they possible 22, 23? Maybe. I'm just disappointed at all these entertainers talking about a crash this year. So on to the news of the day. Unemployment claims came in below expectations. It was 712 on a 725 expectation. It is kind of good and bad. 712 is the low print of this crisis, which is nice, right? Setting a new barrier. Maybe we can finally break below 700 next week. Maybe, fingers crossed. But still, 712 is higher than any week in the Great Recession. 4.1 million people continuing claims. Estimate 11 million folks still out of work. It's not good, but we're almost through it. We have a national address. I don't know if you've seen this, but our president is going to get on TV, and he's going to talk to us about what's next. I expect him to talk about vaccines and distribution and all of that. Get it if you want it. Don't if you don't. Don't bother me. But I expect him to talk about infrastructure. I don't know. Maybe it's too soon. But I think he's going to lay a vision for his next wish list, his next spending spree. I've said it before here, and I might as well say it again. I expect that next bill to be at least $4 trillion on top of the 1.9 that is probably signed tomorrow. But it'll be interesting. We got to see where Mr. Biden and his administration will be taking us. It's going to be market moving, I think. On to earnings that might be market moving. We got Oracle coming out. They hit the top line but missed bottom. More importantly, they gave pretty weak guidance. And that's actually becoming a theme for the kind of cloud stocks. We've seen that over the last, 90 days, a pretty significant drop in future revenue, or at least weak guidance. They did raise their dividend, Oracle that is, and they also increased their stock buyback. Cloudera, kind of continuing with the theme of Oracle, they beat top and bottom, so nice quarter. But again, they gave weak guidance. Again, slowing revenue for cloud-based companies, at least in the short term. Party City hit the top line but missed bottom. Again, gave weak guidance. Talk about a tough business today, I think. Hopefully it comes back. Jeremy Siegel's talking about the stock market being up again 10 to 12% because of all the stimulus, and a lot of that money is going to end up in the stock market based on past stimulus checks. So again, the retail investor is going to flood the market with more cash. AMC Theaters, one of these companies you and I hopefully will be talking about, is one of the examples that, hey, we're coming back. We're going to see movies again. They are, the price is going up, vaccine distribution, movie, schedule being full. It's going to be interesting to see what happens there. Southwest Airlines is getting ready to commit multiple billions of dollars to the 737 MAX. This was an order that was on the books to be done a couple of years ago before the tragedies. Looks like that is going to get done now. So that's what I got for you today. Again, look for that Dion talk. I think it was a great discussion. We got Jonathan here, and then I have a guest later on this afternoon as well. Have a wonderful day. Take care. We'll do our daily show tomorrow at 7:30. Bye bye.